Good morning, everybody, and welcome to the Morning Volatility Report. This is Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to Friday before Memorial Day. That's right, it is the Friday before Memorial Day when all things seem possible, where we give some thanks to our veterans, we take a day off, and options are going to decay this weekend. But before we get to that, Mastering Iron Condors and Butterflies. For everybody, Option Pit Live or higher, you get our Saturday classes for free. There is one per month. Retail value $297, but we'll give it to you for $167. If you're Option Pit Live or higher, you get them for nothing. It actually would pay for your whole gold class, plus access to the courses. So it's a great deal. Sign up. If you're going to take one class on Iron Condors and Butterflies, it should be from us. That's all I'm going to say on that. And with that, a couple of things. Google off to the races. We looked at an idea in here earlier this week. It's kind of making a little move. Certainly helping the NASDAQ move a little higher with NASDAQ up a little bit, but you've got a little Google, you got a little Intel, and you got a little Microsoft. Not really much, though. Cisco looking like it's going to break to some near-term highs. It's been a while since that stock has been above 30, and it looks like it wants to do it. I think that's the next number for that. Probably one of the cheapest stocks in the world. Full disclosure, I'm long Google, long Cisco. Anyway, VIX, it is in the, for whatever reason, the market is comfortable with rates going up. And for right now, nothing is going to really get in the way of that. If we take a look at our future numbers here, right? We have, again, this is the big volume here on the July and the June. June down 24 cents, July down 12 cents. Everything's just fractionally down here. But again, a relatively flat back month. Again, notice you got kind of some flatness out here for the futures because of the election, right? There'll be volatility. These futures will probably stay up around here, and we've got the kind of steep curve down going into the 1575 in June. By the way, this is one of the earlier times this year where the future broke, the short-term future broke 16, and it did it. Let's see, today is the 25th. We expire on the 15th, so that's about 3 full weeks prior. I can't remember the last, this year, I don't think we've broken 16 for the spot future 3 weeks, with 3 weeks to go. So at least for right now, I would say that you're going to have maybe a slight disconnect between what the futures are doing because there's still plenty of premium in them. Remember, the VIX will probably reset to 14 and change on Tuesday. Right, but the futures, the 14 and change, and that gets you to about $1.50 over for the June, which is probably a little more normal. But we might not see much more out of that future. It could be done. So we have non-farm payrolls. All the trades we look at in the chat today are kind of gearing up for the non-farm payroll number. A good number means they might raise early, apparently, or raise, I guess, according to whatever their internal timetable is. But this is still weakening. Still and continuing to weaken. So, you know, how far down, right? VIX cash can only really go down now in little chunks. At least today, I don't expect much more than a quarter of a drop. The futures have a little bit of room, but there's no bid for volatility here going into the holiday. None. So we'll look at time spreads in the indexes, maybe time spreads in some of the oil producers now that oil has hit 50. Just trades like that, trades that seem to thrive in lower volatility environments. But we're not seeing any huge moves in anything, but really, except for Google. I mean, I'm looking just at a lot of the stops we look at. Google by far and away is making a move. Everything really is just moving less than, fractionally. 25 cents here, 50 cents here. Just not a whole lot of anything. I will say, though, that the Russell looks like it's wanting to start getting back to some higher numbers as well. So we have a market that's, I hate to say it, but at least for right now, it's a bull market. It's a bull market again. And it feels like, I guess, all of the central bank interventions, it looks like they're pricing them that they're kind of done with them in the short term, and we'll start maybe seeing the end of them. Who knows really how long that will last. But at least for right now, the volatility market's really looking more at the elections, at least in the U.S. Short-term volatility just has very little bid. And it would not surprise me at all after the non-farm payroll number, the only thing holding up volatility at all is this Brexit thing. That we could ring in a low volatility tick for the year after that June vote. Right, you still have a little bit of volatility right around that vote in the 12 handle. Everything else now is totally destroyed. Obviously, this May 27 expiring today, but we're in the 8-9 handle here. So there is, even with the non-farm payroll number, there is no expectation for vol whatsoever. Now they've taken the weekend out. Those will remark up a little bit, but there's no bid for that juice right now. And with that, I will see many of you in the chat room. We will see you on June 11th for our class. And that about does it for our morning vol report. Expect today to be a little bit snoozy. All right, everybody, have a good one.